तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहे देखो तो सही. I compare an actor's career like the stock market. Sometimes just go out and like, oh my god, what's going on here?
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is
Welcome back. You're watching India Market Close here on NDTV Profit. Now on to our bull versus bear segment, and this one is an interesting one because it's something even I'm keen to hear in terms of what both sides of the coin seem to look like, and Bharat Forge is the one which Puneet is dissecting today. Over to you, Puneet.
Well, thanks for that. So really scampered through for the bull case, to be honest, in this one. Lot of things to look at in terms of Bharat Forge. 30-35% of the company's revenue coming from the US, and now that the tariffs have been put in, it's going to be one of the companies that gets impacted by that deeply. Of course, it's expected to impact the Class 8 truck demand as well for the company. We saw those tariffs coming yesterday, and that is definitely one of the bear cases in the first case. On the bull side though, it's non-auto business, specifically the defense business, has been gaining up traction. Now they've finally got an order worth 6,900 crores for the advanced gun systems. That is expected to, of course, play out over the next 3 to 5 years, and it's a big, huge order for the company. It's the only listed player who's gotten the ATAGS order. The other ones are Tata Systems, that's a private company, but definitely a big win, and that will essentially, at least sustain earnings going forward. That might be impacted because of the tariff system. When you look at the second bull and bear case for Bharat Forge is, of course, the Class 8 truck order. If we can move on to the next one and look at the bear case, there has been weakness in March sales, which is the preliminary number which comes in the first week of the next month. Essentially, it's down 14% on a month-on-month basis, down 22% on a year-on-year basis. And if you look at from September to March onwards as well, it's been down roughly about 9 to 10% also. The outlook for the Class 8 trucks also doesn't look very well. On the other hand, the company is looking to boost its profitability as well as the profitability for its subsidiaries essentially, and its foreign arms as well. So that will be something to watch out for. It had guided that it is looking to do that in FY26 as well, and there will be subsidiaries in Europe as well as the USA. Right now they are loss making, so something to watch out for, and on that aspect going forward. The third key point was specifically the US EPA green norms. Now essentially in the US, green norms were expected to come in for 2027, and that was expected to trigger a pre-buy in FY26. We saw the US EPA head come in with comments that they might be looking at that, and we know Donald Trump's stance on looking at fossil fuel as a fuel. So the green norms might potentially be delayed. This will not trigger a pre-buy. That was essentially the bull case that was anticipated, but that might not come in now. So that is another thing to watch out for in terms of announcement. In case that doesn't happen, the norms stay, it could trigger a pre-buy in FY26, the much needed trigger for the company. And finally, in terms of valuation as well, trading at 31 times price to earnings for FY26, while not cheap, is definitely a lot lower than its 5-year average as well. But another key trigger was today that Morgan Stanley had downgraded the company, estimating cuts of about 15% in this fiscal year of FY26. So overall, a lot of questions to answer for the company, especially in terms of commentary for what is expected in the US. But it is one point that I want to make finally, that for the US, Bharat Forge or the Indian forging companies are very cost efficient, and that's across the sectors that US might get impacted because of higher costs. So in terms of optionality from the others, might not be too much, but definitely in the short term we might see an impact from these multitude of factors that we just spoke about.
Okay, thank you so much for breaking that down for us, Puneet. Of course, tough one in that sense, but also joining us today is Neeraj Diwan, independent market expert. Neeraj, if I can quickly take your views with regard to something like a Bharat Forge, would you at this point, would a counter like this interest you? Would you stay away given the uncertainty? And if so, at what point would you want to enter something like a Bharat Forge?
Yeah, good afternoon.
Good afternoon.
Actually, stocks like Bharat Forge, which depend to, like you right now also mentioned, 30-35% the revenues come from US. So there is this short-term uncertainty, that we need to get some answers for whether whatever they say in the result con call which happens for March quarter, it will be very interesting to listen to most of these companies there and what kind of impact, what is the kind of negotiations or the power, the selling power they have with the buyers in US. So all that needs to be watched right now. I think one should not be in a hurry, because it is not that you are getting it at a deal price right now. It is still, even after the correction you've seen in the last couple of days, it's still available at 30-35 times next earnings. So that's not really that cheap evaluation or that kind of a deal you're getting right now. So I think I'd rather wait and see what is the news flow which is coming because of the tariffs, and what is the the commentary which comes from the management.
Okay. Kunal, your quick view on the technical side of things with regard to a Bharat Forge?
Yeah, I think Bharat Forge already was trading in the deep oversold territory. It had witnessed some technical bounce, but post that we have not seen any follow-up action. Today, action again indicates that the stock has reached the 20 DMA on the technical side, and that opens up more room on the downside. Now, the next support for the stock on the weekly chart is the level of 992. So I can expect that level to be tested. So the short-term view is negative. Pullbacks would be an opportunity to sell it. 990 is what I'm expecting on the downside.
Understood. Okay, got it. The other one that's in focus within the auto pack is Tata Motors. CLSA had a high conviction outperform on this one. They've downgraded the stock to an outperform. They've reduced the target price substantially by nearly 200 rupees. Puneet here with all of the views. Puneet, what changes according to CLSA now?
Well, what's interesting is the high performance outperform rating came actually just a month earlier. So it's a big change that's come in this particular month, and that's of course led by the US tariffs impact. Target price now 765 versus 930 earlier, downgrade to outperform, as you rightly said. They mentioned that FY26 as a year will be a year of rebasing, and that will be of course led because of the US tariffs. US has a tariff of 25% on foreign automobiles, and Tata Motors imports all of those from UK. So they are manufactured in the UK as well as Europe, and this is the Jaguar and Land Rover brand which is then imported in the USA, and that will get impacted. While it is expecting free cash flow to be positive in FY26, we might see some cut in capex. They have a $15 billion plan over 5 years for capex for Tata Motors, and a huge amount there. That will be, of course, in the rebranding of Jaguar as an electric brand as well. The update on demerger is that it could coincide with the CV down cycle getting closer to the bottom. So it could be something to watch out for in terms of valuation, because CV business very profitable, 11 to 12% EBITDA margins there. But definitely on JLR, it's going to be some pain point going forward. So it's something to watch out for in terms of from CLSA, but definitely it's one of the target prices that's at the higher range, between 760 across the brokerages right now.
Okay, Neeraj, first off, thank you, Puneet, for that. Again, Neeraj, give us perspective on how you view something like a Tata Motors. Large chunk, 25% of revenue comes from JLR and from US in particular, to a certain extent. What, in your view, could the impact look like, and is the stock reaction warranted?
Actually, the kind of correction we've already seen in Tata Motor, I think one should keep it under watch now, because another 4-5% from these levels, if it comes to 560, 570 kind of level, I think it'll start becoming attractive again for someone to start accumulating for, if one is looking at 1 to 2 years investment. And I feel somewhere down the line, definitely, the domestic business will become very important, because here economy is picking up. So you can see pickup happening in their commercial vehicle space in India. So that pickup can help them, increase again their profitability from this side of the business. And as far as the EV side of the business in India is also concerned, which is doing well for them. There can be some slowdown here and there for a couple of months, 1 quarter, 2 quarters, but generally it's been on the right direction. So I feel that because the correction has already been huge in Tata Motor, so I think one should be looking at buying this on dips, further if you get 4-5% from these levels.
Okay, and what's the technical view on this one, Kunal? Interestingly, because this one has corrected substantially and continues to see pressure, right?
Yeah, I think overall, if I look at the long-term charts for Tata Motors, the breakout what we had got earlier on the monthly chart was around this zone of 600 mark, and now we have come to 613. So I think we will again test this breakout zone on the downside. So I'm expecting 570, 580 to be tested on the downside. And I think from there it could be a good entry point, at least to play for a pullback again back towards 700 levels. So I think waiting for more declines in the short-term perspective, 575, 580 is what I'm expecting. And from those levels, you can again look for the buy perspective, and targets would be 700 on the upside.
Okay. Now the other pocket that's also facing some pressure today, and we've been talking about this from the morning, are pharma companies. Under pressure after US President Donald Trump remarked about the upcoming tariffs in the sector. My colleague Varsha joins us to tell us why it's difficult to levy these tariffs. We also have a CLSA view. But Varsha, first off, your view.
So yes, Nifty pharma index is actually down now. Why? Because Trump says that pharma tariffs are coming soon in near future, and he clearly said that pharma tariffs will be at level which we haven't seen, and pharma will be a separate category. Now the important point over here, so if you see a lot of every stock, you take a name, you Gland Pharma, Aurobindo Pharma, Dr. Reddy's, Cipla, and all the pharma stocks are actually down on the back of this news. Now the important point is, would it be rational to impose tariffs on pharma and generics? Let's see, the value of US drug imports was almost $170 billion in 2023. India exports pharmaceutical goods worth $10 billion to US, which contributes 6% of the US pharma imports. If I want to talk about generics provides more than $400 billion in annual savings to US healthcare sector. So clearly this seems that it's actually not possible or not rational to put tariffs on India when US is so much dependent on India when it comes, and even on other countries when it comes to pharmaceutical products. Even for China, PII data shows that there was exports of $2 billion from China to US in 2023. Now, why The important point is why tariffs on pharma will actually not work. One is healthcare is actually not a discretionary spending, and supply chain is quite elongated and complex. Even if Trump says that come to US and put up facilities, it would take 4 to 5 years to put a facility and start running. So that's not viable to do that. Large capacity building can actually take decade or longer. Now let's talk about which are the top pharma products exporting countries to US. Starting with Ireland, in 2023 it exported almost 28%. If you see, Germany exported 21% of pharmaceutical products to US. India exported 11%, and the other categories fall at around 50%.
Okay, right, Varsha. So, Varsha, quick follow on. Now, on top of all of this, we've seen these threads before as well. So, what's the view? What's the view that the street is taking? What's the view that analysts are taking? Give us that.
Have you seen any tariff threats before? So previous tariff threats in first term of administration led to promises of US manufacturing. Now companies pledged capex and facility shifts, but nothing materialized. Also US scientists and manufacturing costs are actually 5 to 10x higher, and this leads to lower ROC and longer break-even times for US drug manufacturing. Lastly, let's talk about what ICICI Securities or what brokerage firms are saying. So ICICI Securities says that a 20% of tariff increase will lead to a product cost 120 rupees from 100 rupees. Now pharma companies may stop selling low margin products in the US, and increased cost will actually be passed on to insurance companies, pharmacies or consumers, and insurance companies will likely not cover branded drugs, and CDMO companies are likely to be unlikely to be impacted as they are hard to replace. So these are the views coming from ICICI Securities, and their investment recommendation is the current pharma stock dip is a buying opportunity, and long-term earnings are not expected to be significantly affected as per ICICI Securities.
Okay, there's also a CLSA view. Thank you so much firstly for that, Varsha, for that update. It's also a CLSA view coming through that this looks a little bit difficult to implement, and that eventually the probability of something like this going through, Neeraj, is very, very difficult. But first, I mean, it's 3:20, and therefore the BTST STBT call. Kunal, let me come to you with regard to that. Neeraj Diwan requesting you to wait for just a couple of minutes, take your views on pharma before we let you go. So first off, Kunal, BTST STBT.
Yeah, I think I'll go for a BTST idea, and the name of the stock is Marico. Already the stock has been trading in a strong uptrend. In today's trading session, it has given a breakout over the previous 5 days high. With volumes, the breakout has been, so this is the buy. One can buy with a stop loss on the downside of 660 and look for targets of 690 to 700 on the upside.
Okay. Neeraj, your view with regard to pharma. So we've set it up in terms of how pharma is stacking up and what the risks are like. What do you believe? Is it realistic to expect heavy tariffs in the pharma industry?
Yeah, I think so. There is definitely a fear that has been building up there, barring yesterday when pharma was not in the part of the tariff list, so people thought that it'll be excluded, and again that those hopes are dashed. But it may be difficult, like the CLSA view is also there. Trump can come and say that it doesn't matter to him if car prices go up in US for the consumer for some time. But pharma is an industry where it is difficult to take that kind of a call. So if the prices of drugs and pharmaceuticals and all they go up, that is something which has a really wider impact. So definitely, I think it will be difficult to do this. And to what extent they exactly do it is also not clear right now. But I feel that one can be stock specific and use this opportunity, especially API manufacturers. They are, I think, in a better position because that is something which I feel is very difficult for even a pharma company in the US to do without. So I think one should be stock specific there and use this opportunity, the correction that we've seen in the pharma space right now.
Is this therefore a day like this an opportunity to buy? And if so, what are you buying and what's the rationale?
Yeah, that's what I said, that API companies, something like DV's Lab, there's a smaller one like Senores. These are the kind of companies I feel, these are the ones which are in my list for buys. So I'd be buying these. Though I'll wait for a day or to see again, that if the reaction continues, like today is the first day when we seeing such a major reaction. So we can wait for a day or two and see if the reaction continues, then they are the ones which I'm looking at buying.
Neeraj, I know we have to thank you. This is Neeraj here. Good afternoon. But just one quick word, Neeraj. The IT stocks which have been hammered now by 28-29% from December peak, are they baking in the worst?
Yeah. Hi, Neeraj. I think IT was one space which I think we've all been discussing, we've all been avoiding. So I think that problem still is not clear, because if all this is going to lead to a slowdown in US, a lot of these companies are depending a lot on US for the business. So it may take a little longer time for things to reverse. So I think IT one should still wait. So, we've seen a major correction. Some of the stocks will be attractive at these levels. Some of them have India exposure, which is larger also. But I think I'll still wait and see. I think let's not be in a hurry to buy IT. I would rather buy it on a rebound when things are getting a little more clearer. Right now, there's so many, moving parts there. One, of course, a slowdown which can happen because of tariffs. Then there's this visa issue which may crop up. So there are a lot of things which may happen for the IT industry, which still you need a lot of clarity on.
Okay, Neeraj, we'll leave it at that. Thanks so much for taking the time out and giving us your thoughts. Have a good weekend. We're glad, a lot of people will be glad that the weekend is coming. Kunal, how damaged are the charts for, let's say, a persistent systems or a KPIT? These are usually the stronger stocks, but they have gotten damaged quite viciously in the last few days.
I think, Neeraj, first I'll talk about the Nifty IT index.
Okay.
So I think Nifty IT index, if you see, here the trend had already got weakened when the IT index had broken the 200 DMA. So that was a clear-cut trend reversal for the IT index, and we were very cautious on this. The 200 DMA was broken on 24th Feb 2025. So that is where we were cautious that Nifty IT has broken it down, and from there onwards we have been seeing a lower top, lower bottom formation. Now coming on the weekly chart, it has already given a rising trend line breakdown, and now it has touched on the weekly chart the 200 SMA, and this has been the point where the 200 SMA has not been broken on the IT index except for the COVID. COVID was an exceptional case when it was broken, but Nifty IT has never reached this 200 DMA. And now we are on a break of that. In fact, today the weekly closes, so we are going to close below that mark. So this is a worry for the IT index, and probably from next week the results would be coming in. So you might have some sideways consolidation or a pullback over here, but the larger term trend now is looking weak for the IT space, and a sustained move below this 200 DMA will add further selling pressure, and we expect IT index can test on a short term basis the mark of 30,000, 31,000, which is the next support zone. So currently trading at 33,500. So any pullback you get into the IT space, that would again be a probability to sell. Now the resistance for the IT index is placed at 35,700, 35,600 mark, which was the recent swing low what the IT index had made. So you might get some pullback, but again that pullback would be an opportunity to exit.
Okay, and the same thing for, I believe, quick 20 seconds, Kunal, the same thing for a persistent KPIT, all of them the same template, right?
Exactly. I think even the charts are looking much more worse than the IT index, and that is where even persistent, if we talk about that, has reached the swing low 4,900, 5,000 mark, and probably we can expect some pullback. But the next support zone, what I see for persistent is somewhere around the mark of 4,400.
All right. Thank you so much, Kunal. We'll let you go on that note. It's been a tough day, and now we're sitting at nearly where we were an hour and a half back, so no real major change in that sense, but 1.5% shaved off the Nifty, but the real pain sitting in the broader markets. Let's quickly pull those up. The Nifty 50 trading 1.5% lower. We're just about touching 22,900 at this point. And in terms of how the heat map is also shaping up, if you can pull that up, you'll see the pockets where there is some bit of respite in trade today. Financials, maybe consumer, Nestle, a Tata Consumer standing out, and Asian Paints standing out, and HUL standing out. So maybe those couple of pockets doing okay. But other than that, there's pretty much deep pain. 25 plus stocks trading 2% plus lower in trade today. But steel stocks, IT, Pharma standing out. Those are the three pockets where there is the most amount of pain. And IndusInd Bank sitting 3.5% lower. There's another downgrade that's come, and that is reflecting in the stock price today. Tata Steel down 8.5. Really, that's the story of the day. Let's pull up the contributors on the Nifty as well. And within that basket, you'll see financials in some way able to insulate all the pain. And here, of course, some of the heavyweights reflecting, and of course the Tata Steel, despite it not being a heavyweight, making it here is because of the 8.5% fall in the stock price that we've seen today. Let's look at the advanced decline. We've closed for the day. Let's look at the advanced decline. Well, clearly painful, evidently, as you can see. Just about 1900 declines for just 300 advances, and therefore plenty of pain in broader markets as well. But first, let's pull up the weekly chart on the Nifty. Let's contextualize the week. Let's step back a little bit. And that's how the week has played out. 2% lower after the 1.5% fall that we've seen today. Let's pull up the Nifty mid cap and small cap indices as well, and thereafter the Nifty bank, because that was the one pocket which was in some form an outperformer. 2% lower for the week on the mid cap, but more than 2.5% is the fall in trade today. 3% plus on the Nifty small cap in trade today, just 1.7 for the week. So a predominant part of the pain, at least in the broader markets, have come today, whereas on the Nifty 50, we've seen that kind of flat line pretty much through the week. We've seen 2% lower on the Nifty 50 now for this week. That's how it's played out. But let's look at the Nifty bank as well, because that's one which has been a rank outperformer, 0.5% higher this week, flattish today as well. So that's how it's played out, and largely insulated by some of the larger private banks, at least in trade today as well as through the week. Now let's talk sectors, and let's pull up the sectoral heat map. And what we'll see is, of course, no surprise, the Fin Nifty has also closed in the green, so that's another key positive. Nifty private bank largely flat, so no surprise there. But Nifty metal, Nifty pharma, Nifty oil and gas, that's where a lot of the pain is. Nifty realty bounced back from the lows of nearly 4% low, and Nifty IT also down 3.6. That's where a bulk of the pain is. Nifty autos also seen some bit of pain, 3% lower in trade today. The Nifty PSU Bank, which was doing very well yesterday, down 2.5% today. I want to quickly zoom into the Nifty metal for the week, because we've erased quite a bit in terms of that index today itself, and for the week as well. A major part of the correction has taken place today itself. So nearly 7% down for the week on the Nifty metal. Metal is a pack which is going to be in focus now, and we'll have to wait and watch. The other one is IT, and I also want to pull up Pharma, because plenty of pain pockets this week. 7.5% lower on IT. So bulk of the pain front-ended at least this week in the Nifty IT index. The Nifty Pharma, if we can pull that one up, there you go, 2.3% lower on the Nifty Pharma index. Yesterday doing relatively well, but outside of that, we've seen a 4% correction in trade today. Let's lastly go to the BSE 500 top gainers, top losers, and there you go. Those are some names which stood out in trade. A bulk of those within the metals pack. A Polymed, of course, exporting medical equipment, and that one also facing a brunt of tariffs, and therefore you're seeing that reaction on the stock price. Some financial names in the list on the positive side as well that we can see. But let's last off look at what to watch, because we have a weekend in front of us and a bit of a relief in that sense, as Neeraj mentioned. India Forex reserves, Canada unemployment, US unemployment rate, and we'll have a speech by the chairman of the Federal Reserve. It's also in terms of the last day for the Siemens demerger, Siemens Energy India to list on Monday, on the 4th of April. So something to look out for. Some of these stocks saw quite a bit of pressure in trade today, but shares expected to exit lock-in. KRN Heat Exchangers was one such stock which really saw pressure today in trade, but keep your eye out on these because you'll see lock-in expiry coming Monday. But with that, we are out of time for this week, but we have one quick exclusive for you before I let you go, and thank you and wish you a great weekend. But we had the Paytm CEO Vijay Shekhar Sharma, who reacted to the US tariffs. Listen in to what he had to say. Interesting take from a startup perspective. Listen in.
So Paytm Soundbox, you've seen everywhere, has the method that it speaks the amount of the money. We added the element that you can talk about it. Yeah, that's right. So it can make a payment. So this shows the amount that the customer has made. It can speak, it can do the zero volume. So at many point of times, shopkeepers do not want to speak the amount. They can keep seeing it. So we made it a visual soundbox. So this is a visual soundbox, not just an audio soundbox.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहे. देखो तो सही. I compare an actor's career like the stock market. Some money just go out and like, oh my God, what's going on here?
You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. US benchmark indices end lower as tariff storm takes over the globe. The Nifty drops 1% to end below 23,000 levels, whereas Sensex drops over 900 points to end below 75,400 levels. Broader market bleeds underperform benchmarks. All sectoral indices bleed in tandem with the Nifty. Metals melt under tariff heat. Pharma weakens 4% on hint of tariffs. IT, Realty and PSU banks follow. Rupee strengthens by 20 paise to 85.25 levels. This comes as the dollar index and oil prices dropped sharply amid concerns over the impact of US tariffs on the economy. CLSA downgrades Tata Motors to outperform, cuts target to 765 rupees. says FY26 will be a year of demand rebasing in US led by increased tariffs. CLSA also says that demand elasticity will impact JLR's FY26 volume in US due to tariff hikes. JP Morgan is cautious on the IT sector, says the chances of FY26 being a complete washout are rising. Lists its top picks as TCS, Infosys, HCL Tech. CLSA says that these companies pay out most of their free cash flow and profit after tax to shareholders. Ashok Leyland expects medium and heavy commercial vehicle segments volume to grow in double digits in first half of FY26. Overall, the MHCV growth for FY26 growth seen around 6 to 7%. At the analyst day, Ashok Leyland says that the truck cabin AC norm will increase vehicle prices by just 1%, but hopes for regulatory headwinds for commercial vehicles to surpass in the next 5 years. The pharma sector sprung to cautious mode after the US President Donald Trump hints at tariffs on the healthcare sector. Says the pharma tariffs will be at level which you haven't seen and will be a separate category. However, tariffs on the pharma sector will be difficult to levy. The value of US drug imports was at $170 billion in 2023. India exports pharmaceuticals goods worth around $10 billion to US. Indian exports contribute around 6% of the US pharma imports. The reason why the pharma tariffs won't work is because healthcare is not discretionary spending. Now, supply chain is quite elongated and complex. Large capacity buildings can take a decade or long. Aditya Birla Fashion hints at strong growth. The next 5 years will be about organic growth. No further merger and acquisitions. The company says that it does not want to do any further fundraising and drive profitable growth. The company targets to double revenues in 5 years, whereas expects to be a debt-free in 2 to 3 years. L&T Finance slowdown after retail disbursements for quarter 4 of FY25 were 14,870 crore rupees, registering a degrowth of 1.16% compared to 14,531 crore rupees recorded in quarter 4 of FY24. L&T Finance offers financing for two-wheelers, consumer goods, homes, farm equipment, women entrepreneurs, rural groups, real estate and infrastructure. Bandhan Bank, on the other hand, reports strong loan and deposit growth in quarter 4 business update. The lender informs the exchanges of its strong loan and deposit growth. Now, the company has seen as much a needed shrink in loan to deposit ratio, whereas return of the CASA growth. RBL Bank reports a 7% rise in total deposit to 1,10,942 crore rupees as on March 31 of 2025 against 1,03,494 crore rupees recorded the year before. So the bank continues to focus on growing the share of granular retail deposit in the overall deposit mix, with deposits below 3 crore rupees constituting approximately 49.8% of the overall deposits of the bank as of March 31. Yes Bank's gross advances grow 8% year-on-year to 2.47 lakh crore rupees. Now, deposits grew 2.6% quarter-on-quarter, up 7% year-on-year to 2.84 lakh crore. LIC issues clarification denying any preferential treatment by the Indian government or regulators after the United States Trade Representative reports acquisition regarding sovereign guarantee to LIC. Currently, the Indian government maintains an explicit sovereign guarantee on every life insurance corporation policy, stated that the USTR report. Now, as a result, many customers choose to buy LIC policies over those offered by private insurers, giving LIC an unfair competitive advantage, it said. Less than 2 years after being onboarded to 361 WAM for starting its global unit, veteran banker Vikram Malhotra has resigned from the firm, along with 10 other private bankers who were a part of his team. People aware of the matter told NDTV Profit. Malhotra and his team working for 361 Global were based out of Dubai and Singapore. All of them are now on gardening leave and will be leaving in another 3 months, the above mentioned people said on the condition of anonymity. HSBC initiates buy on Ventive Hospitality. The brokerage firm says that the hospital is catching up quickly with peers, with 11 hotels across India and Maldives and 4 annuity assets in Pune. HSBC highlights the underperformance of the hospital, highlights the strong balance sheet and healthy free cash flow as key strengths. Goldman Sachs maintains a buy on Zomato but slashes the target to 310 rupees. Goldman expects the company to remain one of the fastest growing internet firms, sees some tailwinds in near term, expects a positive impact of tax cuts starting FY26, says the risk to do food delivery margins are on the upside. Benchmark crude slips below $70 per barrel again. Now this has an impact on the margins for oil and marketing companies. Lower crude prices could lead to higher marketing margins. Now, whereas fuel margins could continue to trend at higher levels. Metal stocks feel the heat, hit over 5% intraday. Some metal stocks have lost as much as 6%. Now, metals are a large contributor to the FY26 Nifty EPS. The sector is now vulnerable with new capacity coming in and amid chances of lower prices. Morgan Stanley downgrades Bharat Forge to equal weight from overweight and cuts target to 1,170 from 1,366 rupees. Now says US challenges offset gains in defense segment, highlights the scaling up of its non-auto business well. Registering 58.5 in March, the seasonally adjusted HSBC India Services PMI Business Activity Index was comfortably above the neutral mark of 50 and indicated a sharp rate of expansion, stated a press release on Friday. Although below February's reading of 59, the headline index remained above its long-run average of 54.2. Meanwhile, the HSBC India Composite PMI Output Index increased to a 7-month high of 59.5 from 58.8 in February to signal another month of above-trend growth. In an NDTV Profit exclusive, we learned that Maharashtra government has served notice to Ola Electric and sought explanation on stores operating without trade certificates. Maharashtra Transport Department sends letter to Ola Electric on 31st of March 2025. The letter sought explanation from Ola Electric on stores operating without trade certificates. Ola Electric had 3 days to explain why this action shouldn't be taken against it over violations. Now, an email has been sent to Ola Electric for a comment on the matter. Zepto co-founder Adit Palicha responds to Commerce Minister Piyush Goyal's jibes at the Startup Mahakumbh. In a post on platform X, he says, and I quote, "It's easy to criticize consumer internet startups in India when compared to deep technical excellence being built in US or China. Zepto brings over 1,000 plus crore tax contribution to government every year, has brought $1 billion of FDI brought into the country. Now, India doesn't have large-scale foundational AI models because we still haven't built great internet companies." End of quote. Broking firm Angel One's gross client acquisition fell on a month-on-month basis in March 2025 for the third straight month. Now, on a month-on-month basis, Angel One's gross client acquisition fell 2.2%. On a year-on-year basis, now it's down 43.6%. Angel One reported a 2.8% month-on-month rise in the number of orders at 10.2 crore. Now, the market share in both retail and F&O has fallen. Jeffrey says that reciprocal tariff announcement come across as a relief. Says they see no incremental adverse impact on the large exporting sectors, adds that 27% tariff on India is looking reasonable from a relative perspective. Now, the key risk to view is a prolonged global risk-off. UBS maintains sell on IndusInd Bank and cuts target to 600 rupees from 770 rupees. Says the bank has weak visibility into a likely very challenging year. Speaks about multiple overhangs to drive further derating for the stock. UBS adds that IndusInd's deposits flow, new CEO and external auditor report will be key signposts. UBS upgrades Bank of Baroda to buy from neutral and hikes target to 290 rupees from 270 rupees. The upgrade to buy comes on stable outlook and attractive valuations. whereas the net interest margins will witness relatively lesser pressure versus private peers. UBS upgrades State Bank of India to neutral from sell and hike target to 840 rupees from 760 rupees. Says the bank's risk reward is balanced and net interest margins sustained are key for re-rating. Siemens Energy has set the record date for demerger on April 7th, 2025. The Siemens Energy will be a separately listed entity and the demerger ratio is set at 1:1. Now, which means Siemens Energy's constant price will be determined on Monday. Union Bank tumbles after the bank missed its loan growth and deposit guidance for the financial year 2025. The bank's domestic deposit as on March 31st rise 7.5% to 12.7 lakh crore quarter on quarter. Now, total global deposit as on March 31st rise 7.7% to 13 lakh crore rupees. SpiceJet has introduced daily non-stop flights between Delhi and Kathmandu, set to begin operations from May 10, 2025. The announcement was made on Friday and marks the airline's first new international route following its successful qualified institutional placement, that is the QIP, it said. Motilal Oswal reiterates buy stance on Prestige Estates, revises target to 1,725 versus 2,040. MOSL hails the company's strong pipeline to result in 1.5x growth in pre-sales, expects pre-sales growth of 14%, of FY24 to 27. IEX says that Q4 electricity volumes rose 18% at 31,747 million units. On the other hand, the company's renewable energy certificate trade multiplies 108% to 68 lakh year on year. MK wants investors to brace for volatility as Trump tariffs were more than severe than expected. Now says the tariff announced are a pivotal turning point from EM assets in the coming months. Adds that disruption and larger drag from uncertainty increase recession probability. Karnataka will implement a 5% cess on aggregator platforms, including Amazon, Flipkart, Ola, and Uber, to establish a gig workers fund. Chief Minister Siddaramaiah said on April 3. The platforms will pay a 5% cess of the total payout to gig workers. The state government will provide additional funds to support welfare schemes for gig workers, Siddaramaiah said in a post on X. Ola Electric launches Hyper Delivery, an initiative that is focused on offering same-day registration and delivery of vehicles in the country. Now, the pilot program has been commenced by the EV manufacturer in Bengaluru and will be expanded across the country in phased manner in the quarter. Veteran Indian actor and film director Manoj Kumar, who is widely known for his patriotic films, died at the age of 87. Having a nickname Bharat Kumar, he died at Kokilaben Dhirubhai Ambani Hospital. PM Modi arrives in Thailand for a two-day visit to attend the 6th BIMSTEC summit, where he was warmly received by the Deputy Prime Minister and Minister of Transport. Now, in his departure, he says that the BIMSTEC has played a crucial role in advancing regional development, connectivity and economic growth in the Bay of Bengal region over the past decade. After the implementation of tariffs on the countries, Donald Trump has said that he's open to negotiate on tariffs if the offer is phenomenal. With its funding and bilateral efforts, the Quad grouping is facilitating the delivery of relief supplies, deploying emergency medical teams, and supporting humanitarian partners working in Myanmar to provide care for those affected by the earthquake. Falcon 9 lifts off from Pad 4E in California, delivering 27 at Starlink satellites to the constellation. This single booster has launched 3 missions with 3 different payload types in just over 3 weeks. Kolkata Knight Riders defeated the Orange Army Sunrisers Hyderabad by 80 runs. Playing at their home, KKR put up a score of 200 runs and restricted the visitors at 120 runs. Viewers, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead for you all.
Do you
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहे, देखो तो सही. I compare an actor's career like the stock market. I was like, oh my God, what's going on here?
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
The real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the
The tariff shock rattles global markets. The tariff storm sends equity markets worldwide into turmoil, snapping a two-day winning streak. The Nifty lost its grip on the crucial 23,000 mark, while the Sensex plunged over 900 points, closing below 75,400. Meanwhile, sources say India will not take a knee-jerk reaction to the tariffs and will instead focus first and foremost on finalizing the bilateral trade agreement as early as August. Meanwhile, countries begin their counter-attack on tariffs. China announces an extra 34% tariff on US goods, additionally adds 11 US companies to the unreliable list. After a very brief reprieve, Nifty Pharma drops as much as 4% after US President Donald Trump signals never seen before tariffs on the sector. And the Maharashtra government serves a notice to Ola Electric to explain within 3 days why some of its stores in the state are operating without trade certificates. This comes 2 weeks after NDTV Profit reported that the Maharashtra Transport Commissioner had directed all RTOs to conduct a special inspection of all Ola Electric stores for trade certificates. Startup founders and leaders step up to defend India's startup ecosystem after Union Minister Piyush Goyal questioned its direction and focus. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. For the next half an hour, we're going to bring you the latest in markets, but national and international news as well. So let's dive right into it, shall we? Let's take a look at what happened in the markets today. The tariff storm has rattled equity markets worldwide, breaking a two-day winning streak. All sectoral indices in India have plunged, dragging the broader market lower. Metals melted, pharma stocks weakened as investors brace for the impact of aggressive tariff policies. But to give us a complete wrap of the day's action, let me bring in my colleague Harsh.
Well, Indian markets reacting to Trump tariffs. Of course, we didn't see that reaction on Thursday, but Friday and last day of the week, and we saw a very sharp reaction in trade. What we saw, therefore, is we saw the Nifty down 1.5%. We breached 23K. We, in fact, in some form or shape, were able to hold 22,900. And that's the one positive. But outside of that, we saw FMCG and banks in particular doing okay in trade today. So they were able to hold up. The carnage, though, was, and a bulk of that was in the commodities space, where you saw the Nifty metal decline 6.5%. You saw IT stocks continue to face pressure, and you saw pharma as a basket really face pressure after Donald Trump's comments. So all of that leading to pressure on markets. The advanced decline was way out of shape today. We saw the advanced decline firmly in the negative camp. So the breadth of the market extremely weak today. We saw largely the Nifty mid-cap and small-cap indices also retreat sharply. 2.5%+ down on the Nifty mid-cap, the Nifty small-cap down 3%+. And that kind of skews the way the week has gone by as well. This is a huge impact on the way the week has gone by. When you're looking at all three indices for the week gone by, you'll see a bulk of the decline come from today's impact. Pharma largely had an okayish week overall, 2% lower, but 4% lower today really meant that pharma was one of those sectors which stood out in trade. In terms of certain stocks which did well, and HDFC or Bajaj Finance coming out with their quarterly updates and doing decently well in trade. Tata Consumer was the other one that really stood out, along with some other consumption names. As I did mention, the Nifty FMCG was in the green. But otherwise, a relief that we are at the start of a weekend, and therefore you'll likely see the next reaction only on Monday. But food for thought. Sandeep Tandon doesn't think or is not as negative as the reaction has been on markets today. Listening to a slice of what he views in terms of how markets ought to behave. Listening.
I think I'm optimistic. This is the worst case scenario outcome we have seen. From here. It can only improve. So no point getting capitulated at this point in time. In fact, India actually behaved quite well as compared to global market yesterday. It showcased that India could be a hiding space as compared to what the turmoil you are seeing in the global market. And we also don't have to forget that India is a very large domestic driven economy. So our impact will be relatively less. And I always say, look at not only an absolute basis, absolutes are important, but relatives are more important. So relative to other markets, the tariff differential, we are beneficiaries. So I think it's a great buying opportunity in a sector which you like, rather than getting too nervous about it at this point of time.
And more updates coming in. Sources are telling NDTV Profit that the Commerce Ministry is engaging with pharma exporters as concerns grow over the potential US tariffs on Indian pharmaceutical products. While marginal tariffs may be absorbed, higher levies could severely impact sector margins, given that India supplies nearly 40% of all generic drugs used in the US. Any tariff imposition could also drive up costs for American consumers. So for more details, let me quickly go across to my colleague Rishabh, who has more insights on this.
What we're hearing from Commerce Ministry sources is that they are in constant touch for support for these pharma exporters for any sort of boost or export guidance that is required. There is a dedicated joint secretary for all matters related to pharma. Remember, India is known as the pharmacy of the world. There is a lot of generics that go out and are manufactured right here in India and go out to the US as well as parts of Europe. About as much as about 40% of all generic drugs in the US are actually made in India and exported to the US. Anywhere between $8 and $9 billion is the current worth of pharmaceutical exports that go to the US currently. What we're picking up from major industry voices of the pharma sector is that the margins are extremely tight given the sort of very high regulations that the US FDA also has, a very high level of regulations that they require, a very high level of maintenance of plants, of standards is required, which is very, very capital intensive. So already a sector that is a bit shy on margins, and if additional tariffs come in, then it's sort of a death blow for a lot of these pharma exporters. What we're also seeing is that a tariff imposition by the US would actually hurt US consumers themselves, given how life-saving drugs can be, how important drugs can be. Any sort of a tariff that might come in on India might be very detrimental to US consumers itself. We will continue to track this situation very, very closely.
Absolutely, Rishabh. Thank you so much. The government clearly trying to allay fears at home while also maintaining its cool and keeping a stance where they are not attempting any retaliatory measures anytime soon. But just a day after Indian Pharma was saved from the day's losses and emerged as one of the top performers yesterday, unscathed by the tariff announcements, we saw that change this morning after US President Donald Trump's never-seen-before tariff comment on pharma, signaling tariffs in the near future. Now, this announcement caused Nifty Pharma to drop as much as 4.3%. Varsha, my colleague, now giving us a roundup of what happened in the markets today as this fresh warning raises key concerns around price increase for the generic medicines in the US, drug shortages, rationalization in low-margin products, and supply chain disruption that are obviously back on the investor radar. Is that not right, Varsha?
So yes, Nifty pharma index is actually down now. Why? Because Trump says that pharma tariffs are coming soon in near future, and he clearly said that pharma tariffs will be at level which we haven't seen, and pharma will be a separate category. Now the important point over here, so if you see a lot of every stock, you take a name, you Gland Pharma, Aurobindo Pharma, Dr. Reddy's, Supply, and all the pharma stocks are actually down on the back of this news. Now the important point is, would it be rational to impose tariffs on pharma and generics? Let's see, the value of US drug imports was almost $170 billion in 2023. India exports pharmaceutical goods worth $10 billion to US, which contributes 6% of the US pharma imports. If I want to talk about generics provides more than $400 billion in annual savings to US healthcare sector. So clearly this seems that it's actually not possible or not rational to put tariffs on India when US is so much dependent on India when it comes and even on other countries when it comes to pharmaceutical products. Even for China, PII data shows that there was exports of $2 billion from China to US in 2023. Now, why? The important point is why tariffs on pharma will actually not work. One is healthcare is actually not a discretionary spending, and supply chain is quite elongated and complex. Even if Trump says that come to US and put up facilities, it would take 4 to 5 years to put a facility and start running. So that's not viable to do that. Large capacity building can actually take decade or longer. Now let's talk about which are the top pharma products exporting countries to US. Starting with Ireland, in 2023 it exported almost 28%. If you see, Germany exported 21% of pharmaceutical products to US. India exported 11%, and the other categories fall at around 50%.
Yeah, so I think there have been comments that we'll see the pharma sector coming under tariffs very soon. So basically that review should not take long, and we'll have tariffs on the sector and probably at levels not seen before. So that's the comments. Those are the comments that we are hearing on the sector. But I think I'll kind of reiterate my view on this. So I think even if tariffs are imposed on the sector, they will be inflationary, and so I would divide this space, pharma space, into 3 categories. One is the commodity generics, wherein I think tariffs will be passed to the consumer because there is no space for Indian companies to absorb. Neither is there are capacities in the US to replace the Indian demand that's coming, Indian supplies that is coming. So broadly, that's where I am on the commodity generics. Then there is a second part to the business, which is high value generics, like those of drugs like Revlimid and others. So I think on those we might see some impact, but the dependence is not very large as of now. So I don't think that will create, that is something we need to worry about in terms of the numbers that can basically it will not dent the numbers basically too much. And the third is the NCE portfolio. I think the only company there is Sun Pharma, which I think even there the impact should not be more than 1 to 2% of their overall net profits. So.
And while Pharma was the only ongoing basket that rallied the previous day, as the White House's fact sheet suggested the sector was exempted from April 2nd tariffs, earlier in his Liberation Day speech, Trump clearly stated that the US can no longer produce antibiotics to treat its sick population, calling it a significant problem for the country. Let's listen in.
Chips and pharma tariffs are not on the table. Starting very soon. The chips are starting very soon. The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals as a separate category, and we'll be announcing that sometime in the near future, not too distant future. That's under review right now.
We import virtually all of our computers, phones, televisions, and electronics. We used to dominate the field, and now we import it all from different countries. A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate. We used to dominate it totally. In short, chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations.
And while tariffs continue to cause volatility in major economies, India is one of the few that has chosen to keep its cool. Sources have told NDTV Profit that India is prioritizing the finalization of its bilateral trade agreement with the US rather than taking any retaliatory action on tariffs. Sources added that certain tariff reviews are part of ongoing trade talks, which India hopes to conclude as early in August, effectively making that deal the fastest bilateral agreement finalized in just 6 months. And more updates coming in. Trade tensions between the US and China have escalated once again as China is going to impose an additional 34% tariff on all US goods starting April 10th. Beijing has also added 11 US companies to its unreliable entities list and introduced export controls on certain rare earth related items. Now, this is clearly a retaliatory move, with China filing a lawsuit with the WTO over US reciprocal tariffs. My colleague Pallavi now joining us from the newsroom with more updates on this. Pallavi, first take us through China's retaliatory actions, and if you could, for our viewers and for me as well, explain what an unreliable list actually entails and means.
Right, Sanjana. So like you've mentioned, China has just announced that it will impose additional tariffs of 34% on imports from the US. That's in retaliation for the duties of about the same amount that have been imposed by US President Donald Trump about a day back as a part of his very aggressive trade agenda. The Ministry of Commerce of China has said that the tariff will be imposed on all imported goods originating from the US from April 10th. Now, levies on Chinese exports are set to rise to more than 60% after US President Donald Trump's announcements of reciprocal tariffs of 34% that came on existing tariffs that the US had already announced previously, and the rate will be on top of the current applicable tariff rates in case of China as well. Along with that, of course, the Chinese Commerce Ministry has also announced restrictions on some of the rare earth related items. The Commerce Ministry has also added 16 US entities to its export control list. These export controls are on some medium and heavy rare earth items. China has also started an anti-dumping probe on medical CT X-ray tubes imported from the US as well as from India. It has also said that it is halting imports of poultry products from 2 US companies, and it has added 11 US companies to its unreliable list, along with the 16 companies on export control list for dual-use items. Now, this is, of course, an evolving situation. We are seeing several economies talking about retaliatory tariffs after US President Donald Trump has imposed tariffs, and we will continue to bring more updates as and when we have any.
Thank you so much for that update, but also just, give me a sense of how do you think, or how can we expect the US to respond? Do you think that we could see further retaliatory measures? And also, is there room for negotiation, or are we heading now for a prolonged economic tension to actually take place, given that this is slowly but aggressively becoming a full-blown trade war? Let's also remember that Donald Trump just earlier this morning had actually given another very cheeky soundbite, as he usually does, about whether there is room for negotiation. And he very explicitly referred to the TikTok deal. So wondering whether that's still on the cards, and what could be the potential strategy for both economies moving forward.
Right, Sanjana, that's a good question. So, at the moment, from what we're gathering, every country sort of has its own strategy in how they want to tackle the situation going forward. Now, like we've been discussing, in case of India, the Indian government appears to be of the view that retaliatory tariffs might not be the best course of action in the given scenario, and has instead opted to negotiate with the US government. In case of China, that is clearly not the case. As such, negotiations and how they pan out, when they take place, and what the result of those negotiations are, appears a tad more bleak in case of economies like China, since they have outright decided to impose retaliatory tariffs. But what we've been gathering from the economists and trade experts we've been speaking to is the fact that every time a country, especially major economies such as China, are taking these measures, the downside risks to these domestic economies as well as on a global front is definitely on the rise. Now, there's going to be obvious repercussions from a domestic perspective, but clearly with every instance of a country imposing retaliatory potentially tariffs after what the US has done.
Sure. Pallavi, sorry to cut you off. Sorry to cut you off, but I'm also being joined on the phone right now with Richard Harris of Port Shelter Management joining us on the phone line. Richard, thank you so much for your time. We're looking at retaliatory measures coming in from other major economies. China not the one to step down. Pallavi and I were just discussing this, but I'm going to pose this question to you. How do you expect the US to respond? Are we going to see further retaliatory measures?
I don't think so. You know, I think certainly with China, the US has gone about as far as they can without saying, okay, let's have 100%. No, I think that China's playing a waiting game. They are the one country that can stand up to the US and basically just eyeball them. I mean, can you imagine the difficulty that Apple is in, maybe with having 60 or 70% tariffs on their iPhones? You know, that's going to cause a bit of a row in the US. So I think China is now also playing the bluffing game. And what we've seen with Trump in the past is that if somebody stands up to him, he normally backs down. But it's difficult to exactly say how this is going to happen. If we're looking at the markets, I think that, you know, we're seeing a down day today in Europe. The US is going to be very important. You know, are people going to start selling? Are people going to start getting worried about deleveraging? You know, what exactly is going to happen? And I think the weekend is going to be very important to see what kind of sentiment is going to come through for Monday morning.
Richard, besides that, I think also the question on everybody's minds, especially in America and China, is how will this affect consumer prices in both the countries?
Well, it's got to be inflationary. I mean, China won't be too worried because they've needed a bit of inflation for a while. But, you know, the US, I think, is in a very fragile position. Rates are already, you know, on the high side compared to where they have been maybe over the last 8 or so years. And the Fed will have to make a decision. Are they going to put rates up to curb inflation, or are they going to have to put them down to deal with a slowing economy? And my guess is that what we're going to see is that interest rates falling will win because the Fed doesn't want to be accused of stalling the economy. So we could see a position where bonds might do okay. You know, rates come down. However, that means that inflation will remain high and probably stubbornly high unless we get a real recession coming in.
Richard, my last question to you before I let you go. Do you think that this could push US companies to diversify supply chains away from China?
It's very, very difficult to do that. I mean, don't forget they are already. There are a lot of companies moving into India, Vietnam. I mean, Vietnam, of course, is now doubly hit because it has very high tariffs against them. I think it's just very difficult. You know, if Trump is sort of saying, okay, build your auto plants in the States, he's probably going to be 90 if all those auto plants are actually working. So it's just not going to happen. And I think what we're seeing now is an exercise in futility. He's tried the old New York real estate bluff. It's not going to work. It may work with the UK. It may work with isolated countries in Europe. It's not going to work with China, and it probably won't work with India. But I think India will stay back and just watch the fun and see what everybody else is going to be doing.
Richard, India is not one to retaliate at the moment, definitely keeping its cool. Thank you so much for your time. Remember, China retaliating as hard and as large as 34% additional tariff on US goods. Let's take a listen in to what US President Donald Trump indicated earlier this morning with a willingness to negotiate tariffs if other nations provide something phenomenal in return, is what he said. He emphasized that tariffs are not merely about protectionism, but serving as a strategic tool in trade negotiation, and wondering whether that still stands true. Let's listen in.
You know, it depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff? The tariffs give us great power to negotiate. Always have. I've used them very well in the first administration, as you saw, but now we're taking it to a whole new level because it's a worldwide situation. And it's very exciting to see.
All eyes on what other major economies will do. Let's shift focus to what's happening now in Maharashtra, where the government has now issued a notice to Ola Electric Mobility Limited demanding an explanation within 3 days for why some of its stores are not operating without a license. Now, this action follows a directive from Maharashtra Transport Commissioner, if you remember, had ordered all regional transport offices to conduct a special inspection mission on March 21st to verify compliance across Ola Electric stores. My colleague Tushar now joining us live on the story. Tushar, we have been tracking the story relentlessly. Give us the latest that we know. We understand now sources are telling you that the Maharashtra government has clearly upped the ante and asking now for, a reason as to why these stores are still functioning, and that too within 3 days.
Yeah, hi. Good evening. So essentially, the story has been panning out for almost a month now. All the what has been found so far in multiple states is that Ola Electric stores are operating without trade certificate, which is mandatory for operating a dealership as well as service center. It's the TC number, the trade certificate TC number is what is issued with a vehicle when you are actually going to purchase it. Now, most of the action, what we have seen so far, the highest number of actions has come through from the Maharashtra Transport Department. The Transport Department has first of all raided Mumbai and Pune stores, and following which a few vehicles were confiscated. That expanded to a special inspection mission to all the stores in the state. After that, on 31st March, a new notice was issued to the company, which essentially meant that the company has to now actually respond to the company about to the Maharashtra government about why their stores should not be shut down for the lack of a trade certificate.
Absolutely, Tushar. Thank you so much for bringing us those updates. Maharashtra clearly cracking down now on Ola Electric. We'll continue bringing you the latest developments. Moving on, this month, the Adani Group's Mundra port became the first Indian port to handle over 200 million metric tons of cargo. My colleague Agni was there on ground to get you a special ground report from India's largest port operation.
In the desolate, forgotten edges of Gujarat, where India shares a border with Pakistan, clean energy is being generated. Enough clean energy to power all the homes in Canada, Poland or Spain. Adani Green's Khavda Park is the world's largest renewable energy project with a mixture of solar and wind energy.
This was a land until a few years ago that was barren in every meaning of the word. No plants could grow here, no animals could sustain here. The nearest village, the nearest sign of human population is at least 80 kilometers away. But this is the place which was perfect for a renewable project. Winds of up to 8 kilometers per hour, solar radiation which are as high as those seen in Ladakh made this region the perfect spot to establish wind and solar plants.
The Khavda Park covers 538 square kilometers. That's almost as big as Singapore. So far, Khavda has commissioned 4.6 gigawatts of power and expects to reach 30 gigawatts by 2029. The scale of everything in Khavda is extreme. Even the windmill turbines, which have a capacity of over 5 megawatts each, as compared with 3 megawatts in regular windmills.
The company says that the park is 5 times the size of Paris, and which is about the same size as that of Mumbai. Now, if you think about it, the company repeatedly claims that this project can be seen from up in space.
Back in Khavda, though, the park is expected to power 1.6 crore homes. This clean energy is equivalent to the carbon offset of 300 crore trees, or taking 1.4 crore cars off the road. In the remotest corner of Gujarat, the future of energy is taking shape.
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहा है. देखो तो सही. I compare an actor's career like the stock market. Some money just go out and like, oh my God, what's going on here?
Hello and welcome to this very special edition of KYC, Know Your Company. Today we're going to break down, analyze Bajaj Auto. We're going to start off with obviously trying to understand exactly what Bajaj Auto does. I'm going to start off by telling you all that it's of course the flagship company of the Bajaj Group, manufactures two-wheelers, three-wheelers, and it does both passenger vehicles within that two-wheeler pack to consumers, as well as in the CV space, it does three-wheelers as well. So wide variety in terms of product suite. You're looking at some of the brands that it operates. KTM through its ownership of the KTM brand, through the Austrian brand, which is KTM. But outside of that, pretty much all brands are in-house and developed in-house. Chetak, of course, EV being one of the newest brands that they've launched within the EV space, and quickly gaining market share, that one. This is how the overall sales have stacked up for FY24 versus FY25 full year. Of course, now we have full year numbers in terms of sales. Looking at 7% overall, but look at domestic, it's just 3%. And that's where some of the softness in terms of the numbers have crept in terms of the company as a whole. The two-wheeler export market on a low base has done around 13 to 14%, which is okay. It's a low base and therefore you would expect something better from it. But at least FY25 numbers, okay. This is the place where it's been slightly soft, the operating metrics, where Bajaj Auto is concerned. But I want to try and highlight some of the verticals and the pillars of Bajaj Auto. One, it has a 100 to 110 cc segment where it runs the Bajaj CT and the Platina brands. 125 cc and above, it has Pulsar, KTM, Avenger, among others. And then it has Pro Biking as well as Triumph. So those are some of the other brands that it runs, Bajaj Auto. It also does three-wheelers where it has a 75% plus market share. Exports as well is fairly large for it. It does exports in 80 countries worldwide. Mexico, Peru, Ethiopia, Turkey, Saudi Arabia are just some of them. You also have a Bangladesh and a Myanmar and an Afghanistan as part of that pack. It's also ventured into Latin America. So Africa, Latin America now being the big focus areas. And we will also have a conversation with the management, Mr. Rakesh Sharma, Executive Director, to talk to us about what the outlook is like going forward with regard to a Bajaj Auto. But let's quickly look at what are the metrics that we'll be tracking for this particular company. We're going to start off, of course, with the four basic ones: income statement, balance sheet, cash flows, shareholding and return ratios. Those are the five basic ones. Thereafter, we look at street cred, street coverage, and we'll also look at the valuation picture. And joining me today to break this one down is Puneet Javeri. Welcome, Puneet. Let me allow you to start off with the income statement. This is home turf for you.
Yeah, well, definitely, and it's a very strong income statement. The company has over the last 5 years, we've definitely seen post-COVID, the strong recovery in financials after that blip in 2020. So, revenues of FY24 was about 44,000 crores for the company. It's grown at a strong CAGR of 17% over the last 3 years. EBITDA has also kept up pace, much higher, 21% growth for the company, while on a profitability basis, it's more than 7,400 crores of profits generated in the last year. That momentum has continued in this particular year as well, and profits have grown at a CAGR of about 18%, Harsh, overall. So definitely it's a flagship brand, much known about the company, but definitely a very big financial gain for the company, essentially very positive on that aspect.
Yeah, they've done well on profitability as well, right, Puneet? Clearly a thumbs up, 2,000 crore plus of PAT. They also do 20% plus of margins, which is very, very healthy for an auto two-wheeler and three-wheeler maker. And they've also to some extent signaled the larger focus on profitability versus going only for top line and volume growths. That's basically what they've signaled. And therefore, compared to peers, this one is doing something slightly more differentiated in that sense. So something to be kept in mind. Let's quickly look at the balance sheet as well. No concerns here whatsoever, frankly. It's a net debt-free company. It's got nearly 2 lakh crore plus of market capitalization, and thereafter being net debt-free and generating strong free cash flows means that debt is not a concern, at least at this point, and therefore clearly a thumbs up on this count. No concerns. Puneet, cash flow.
Well, cash flows also kept up pace very strongly. The cash flow from operations for FY24 was roughly at 6,500 odd crores. And when you compare it over the last 3 years as well, it's been very well at 28% CAGR. This is despite, the new EV brand of Chetak launched in the two-wheelers. They've also launched the electric three-wheelers as well. And while on an EBITDA margin basis, it's not helped growth because the two-wheeler business has been growing, but they've maintained the EBITDA margin at 20%, and that has flown to the cash flow as well. The net cash flow number as a whole is coming at 319 odd crores. It's 11% CAGR, Harsh, on that aspect. But overall, both income statement and balance sheet doing very well, and that's flown into the cash of the company as well.
Absolutely. I'll quickly take you through shareholding as well. Thereafter, we'll also look at return ratios. But in terms of shareholding, you're looking at promoter holding at 55% currently cumulative. Mind you, there's been a buyback as well, and therefore actually promoter holding has only gotten better. And that's one key positive. Bajaj Holding is the key promoter, of course, promoter entity. 34% is what Bajaj Holding holds. It's been this way for the last at least 7 to 8 years, and therefore what you're seeing is good, strong promoter ownership continuing, and intent of the promoter as well to continue to hold. You have then Jamnalal Sons Private Limited, which is one of the other entities, which holds around 9.3%, and a Maharashtra Scooters, which is also a listed entity, holds around 2.5% of the company at this point. And then there are, of course, smaller shareholders within the promoter group. But overall, it's a very, very strong promoter holding, and it's a well-held, closely held company in that sense, of course, of the Bajaj group. So unlikely that this will change significantly. A clear thumbs up on this one. Return ratios, Puneet.
Well, definitely. We've seen very strong return ratios for the company. Return on equity more than 30% for the company in FY24. And, that's reflective of the strong profitability that's flown into return ratios as well. Return on capital employed, and that's very key for this company, more than 28.8%, and that's actually improved to 30% in the 9 months of FY25, Harsh. So no complaints here as well. It's a big thumbs up on this aspect as well.
Okay. Let's go across to street coverage then, Puneet. So that's how it really stacks up in terms of street coverage. Is fairly healthy coverage in that sense. But just in terms of upside, there are analysts on the street, Puneet, which believe that a TVS, an Eicher, and other auto stocks look far more attractive than this one. And yes, therefore we call this a neutral, even though it's very, very well covered. It being a Nifty 50 stock, in that sense, it's very, very well covered. But nonetheless, we'll call it a neutral, 66% buys, and of course the upside being 20%ish. But there are much better opportunities out there as per what analysts seem to suggest in this segment. But you want to take us through street cred?
Yeah, and definitely, just one comment, because Eicher as well as TVS, they both have, so TVS has a scooter portfolio, and that segment has been growing very well. And I think hence it is much overvalued, and we get to valuation there. And Eicher specifically, it's tapped the export market for the first time this year. They've crossed 10 lakh, and hence I think the growth aspect there is much higher. Hence, your specific point of 66% buy calls, and that's why still a neutral. The street coverage, though, we've seen a strong return potential, 277% has grown in the last 5 years specifically. Compared to the Nifty, it's at 180%, and dividend yield has also been 1%. But I think we were speaking about this before as well, because if you remove the March first part of the March, if you take it from March 1st, I think the return hasn't been as high as expected.
Yeah, I mean, when you pull it back a couple of months, because of course 5 years exactly will mean the lowest of lows of COVID.
Yes.
Therefore, is that fair to look at returns from the lowest of lows of COVID? Maybe not.
Yeah.
But if we were to look at it, say from 1st of February, the returns it's been a 2.5 bagger in the last 5 years, which is fairly satisfactory. But what we've seen is that it's underperformed the index marginally. And therefore, what you would therefore believe is that maybe a better performance. And the second piece, Puneet, which you kind of highlighted to me, is that some of the other players, like a TVS, have done phenomenally well in the same period of time.
Yeah, I think TVS has grown 8x in terms of share price performance in the last 8 years, and right now around 2400 is where TVS is. That's fallen from 3200, so it was much higher there. Similar with Eicher, if you just count on this metric, it's around 320%, so 3.2x bagger in that aspect. So,
but even this one's fallen nearly 30%.
Nearly 30%, right? So, yes, definitely. And
so that is to match
TVS. Yes. So, but on this particular metric, we've seen the other two, Eicher as well as something. And while they have outperformed Hero MotoCorp definitely in terms of growth and share price performance, I think that is one key thing to highlight as well.
Fair point. And what about valuations, Puneet? You're the best to drive that.
Well, valuations was tricky to say the least, Harsh, essentially for this in the two-wheeler space, because we've seen TVS being a key outperformer with 37x of FY26 price to earnings.
And Puneet, sorry, but each of these cater to a very different market. Each of them have very different priorities in terms of how management looks at the market as well. So sorry, yes, please.
No, definitely, because for Eicher specifically, we've seen the export market growing very well in this year, and it's 350cc and above, so it's catering to the premium market, and growth has been there in this year, and hence visibly there. For Hero MotoCorp, largely caters with the 100cc segment of the company. The growth has been largely absent, and now there are reports also that there is a lot of discounting happening, so might affect margins, and that's why it's trading at roughly half the more than 150% below something like TVS. And TVS is a complete product portfolio, multiple brands. They have 3 separate scooter brands, unlike Bajaj Auto, which has the Chetak already. But with Jupiter, with Ntorq, that market is growing very rapidly. Apart from what they have in Apache in the motorcycle segment, and now they've added Norton as well in the ultra premium segment. So I think that's where the valuation comfort is there specifically for TVS. When you look at Bajaj, it has fallen from its, we've seen the 30% correction, and hence it's become more favorable. And now the Chetak brand has been doing very well in the EV segment, sales of about 2.3 lakhs. But we've given it a neutral basis on the higher growth prospects of TVS as well as Eicher Motors.
Right. If I can just ask you, and this is completely off the bat, FY27, would you have visibility on how these P ratios move, especially for the first two?
I think currently most analysts are penciling in, and are waiting for the management commentary in Q4, because the domestic market has fallen for 6 consecutive months for for Bajaj Auto, and I think that's why the comparison is not available for FY27 specifically, but definitely I think in that aspect as well, Bajaj might offer a very interesting opportunity going forward, because the company has a lot of cash. We've spoken about that. So I think eventually, once there's visibility on growth over the next year or so in terms of sales, I think those valuations become more attractive for Bajaj Auto.
And we've asked the management exactly that. So maybe we'll wait for that. But let's quickly look at how the rating parameters stack up in that sense. There you go. So income statement, balance sheet, cash flow, shareholding is a clean thumbs up on all 4. Also, in terms of street coverage, a neutral there. Street cred valuation, a neutral, but return ratios again very, very healthy, anything between 28 and 30%. That's how the KYC rating stacks up for a Bajaj Auto. Mind you, we do factor in that this is a Nifty 50 company, and therefore we factor that into the ratings that we give, and therefore you might see that compared to a benchmark, you will see a slight bit of more rigor with regard to how we give a rating on a Nifty 50 stock. You would have higher expectations from it as well. But let's look at SWOT, Puneet. The strengths being There's very strong brand visibility. Chetak has been a brand for Bajaj Auto since the time me and you were born, and continues to be a very strong brand. So and Bajaj Auto therefore has had a very strong brand. I remember when I was a kid, Hamara Bajaj was the big ad, and that continues to be the case. But what they've done, and what really stands out for me here is that they've been able to hold on to margins.
Yeah.
A 20% margin for an auto company, which is also doing EV. Is commendable in that sense. And we've asked him the outlook with regard to that as well. So listen in. But in terms of weakness, two-wheeler market is seeing a slowdown. They're letting growth go. We spoke about the operational metrics. We gave that one a thumbs down. Remember, even though that's not part of the metrics in the KYC rating, but we did give it a thumbs down. And there's also slowdown in the export market. It's starting to pick up. But what's the visibility like for FY26 is something which will hold the key. That's currently the weakness. But what are the opportunities and threats, Puneet?
Well, definitely, the new EV segment, the two-wheeler Chetak brand has been doing very well. It will look to build on to that growth, and we've spoken to the management about the growth aspect of the EV segment. They've also added the three-wheeler EV. Now they've relaunched a brand called GoGo, which will host essentially the three-wheeler business of the commercial vehicle side. That is a very interesting opportunity, and valuation versus peers we discussed in detail. Currently, there's less visibility on the growth aspect of the domestic two-wheeler business. I think the export growth was absent this year, and hence we've seen that correction in the stock price as well. But overall, for the next year, they will have Africa come back, which is a big export market. They've added Latin America, Brazil capacity has been increased now. So overall, it'll be very interesting to see in Q4 the company's commentary on growth for the next year.
Puneet, let me pause you there. So after this, once we're done with this, I want to also look at the graphic of the March numbers and probably try and break that down before we go across and speak on the interview, because that's what you're talking about. Sorry, please go ahead.
No, definitely. And that's the key aspect, because currently they had penciled in 6 to 8% growth for this year. It's coming at 7%. So definitely meeting guidance, but it's still slower than something what TVS has done. And the threat is, of course, the slower two-wheeler growth. We've spoken about that as well with the management in terms of how next year is shaping up. And export market, that is currently, we've mentioned that as an opportunity as well. But we've seen increased competition from the likes of TVS. TVS now exports roughly 1 lakh units a month in terms of exports. And that's very close to what Bajaj does. Bajaj is at 1,40,000, 1,50,000, and that it doesn't take too much time for the brand like TVS to increase that aspect as well. So definitely could be a threat, but the opportunity as well as the strength of the brand is something to talk about here.
We spoke with Bajaj Auto's Executive Director Rakesh Sharma, I beg your pardon. Here's what he had to say on the potential challenges for the company going forward. Listen in to a slice of that conversation.
Well, yes, over the last 5-6 months, and if you see, in fact, the entire year, we've sort of come out flattish when you look at volumetric growth. Our approach has constantly been in the market to optimize the top line, bottom line, and our. So therefore, you will see that this year we have achieved a milestone of 50,000 crores at an overall level. And at least in the first 3 quarters, as you know, our EBITDA margins were 20% plus. The final quarter, the financial results are still in the making and will be declared very soon. So that sort of indicates to you that it's not a one-sided approach which Bajaj Auto takes. We have to constantly look at optimizing the bottom line and the top line, as I said. And there have been periods of high demand, but there have been categories where it's been like, almost a red ocean kind of a situation over there, and we have not participated. So yes, in terms of being flattish, it's absolutely correct. In the domestic motorcycles, we have been a little bit flattish, but that's the outcome of balancing the top line and the bottom line.
Fair point, Mr. Sharma, because while I look at the last 6 quarters, your standalone EBITDA margins have been over 20%, so that's commendable. The only aspect for an investor, of course, you mentioned 6 to 8% growth at the start of the year, and you've achieved that as well because of a stronger export market growth, revival in second half of last year. But how should investors look at your share of domestic market growth, because that's been, as you rightly mentioned, it's been a negative for the last 6 months or so. So even the 125cc segment and above, because I think your 100cc segment is 8 to 9% of sales, so the rest 90% is also not growing in the domestic market. So I just want to understand, as a company and as an approach, what is, if you can guide us also, anything to watch out for FY26 also. Do you see the growth being in that 6 to 8% range, or do you see it at the lower end of that range as well?
Well, the 6 to 8%, which I mentioned earlier, and which I would say around 6% is what we would take the industry to be growing at. And we believe that we have, at least over the last 6 to 9 months, put in place a portfolio which should deliver us in the coming months, in the coming year, and a performance which will be higher than that of the industry. FY25 was also a period where the EV business was scaling up. And towards the end of FY25 is when we achieved, we got rid of the negative margins which we were getting in the EV business. And that then allows us a greater degree of freedom to actually balance out growth and profitability. With the substantial EV portfolio being now in the green zone, 25% of our domestic revenues come from the EV vehicle sales, and all that is now in green zone, and that gives us a certain flexibility. So therefore, we feel that given the kind of product portfolio which we have put in, whether it is a CNG based bike or it is the sub-segmented Pulsar variants targeted at sub-segments, almost 8 or 9 of them over the last 6 months, they should be able to drive growth. And of course, there are more new products in the pipeline in the coming months.
Point taken, Mr. Sharma. Harsh also joining in. Want to quickly check with regard to where the margin trajectory goes with regard to EV. You mentioned that it's now turned green in terms of EBITDA positive. Talk to us about how quickly does it go and scale the 20% number, because that's the number you're looking at an overall level.
Well, that's quite some time. If you understand the cost architecture and the dynamics, sure, the EV, I'm sure you will understand that for a 20% EBITDA at the EV is
What's that journey? How does it go? So talk to us about FY26. Will it continue to go up in this year as well as in the next year? Is that how you see it?
You see, these things are outcomes of greater growth forces. If I cannot sort of bet on it going. Of course, our endeavor is we were in the negative territory. We have now come into the green area, and we will continuously try to increase profitability over there. Like I mentioned earlier, we are optimizing top line, bottom line, and competitive position. All that is being done in the context of a very volatile international environment. To just, give you a number and say that this is exactly what is going to happen is not, it's not correct on my part. I can alert you to the various forces and our intent, but to be definitive about it, I won't sort of go up to that thing. Our intent is, of course, to keep improving the profitability, maintain our leadership, and balance the top line and the bottom line.
Point taken. And sir, PAT positive on both of these individually as well as combined. Again, the outlook there also, my guess is that you'll be non-committal. You're more skewed towards, or rather you're more focused on growth. Is that the right way to think of it?
If I've understood your question correctly, I'm saying that we are balancing growth and profitability with competitive position, and we don't calculate PAT at a business unit level.
So, a quick question with regard to export. You've had a soft month in the month of March. FY26, does growth come back significantly? Of course, FY25 also you've grown decently, let me give you that. But so overall, FY26, what's the growth outlook like? Because each geography has its own set of issues.
Yeah, you're right. And the structure of growth, whether it is domestic or international, it's such that it is not linear or secular. It is not a straight line. It's more like a snake in the tunnel. We have to be, some quarters will be high double digit and some quarters will be, low single digits. That's just the nature of the markets right now. That's the nature of the construct of it. We have grown by 13-14%. And I would say that unless there is a major disruption, and always we have to put out that caveat when it comes to international market, we should be clocking a similar kind of a growth rate in FY26.
Mr. Sharma, I just want to talk about the EV segment, because you had a very strong year in terms of the two-wheeler, and that's been highest compared to all your peers, and you are about at 230,000 units sold in FY25. For next year, what is the growth outlook? Because now you have a sizable base as well. I think you're number 3 in terms of overall sales for this year. In FY26, should we expect, firstly, on in terms of performance, any kind of growth? While if you can give anything quantification in that aspect, and on EV profitability, 2 electric 3-wheelers was already profitable a couple of quarters ago on EBITDA. The electric 2-wheeler business is also EBITDA profitable. On PAT profitability of electric 3-wheeler, can we expect that in FY26?
I just said that we don't calculate PAT at a business unit level. The PAT is done at a corporate level, which is a combination of all the 6 business units which we have. The growth prospects for electric vehicles are promising. The industry is growing at about now 20% or so. The subsidies, as you know, have been halved in 2-wheelers. We have to see what the impact is, but we think that it will certainly be still at a 15 to 20% growth. Q4, Chetak became number 1, and therefore we've got the momentum. We've launched a new platform, which is our 3.5 series. A few more products are in the anvil. The bottom line has turned positive. So things have lined up very well. New products, positive bottom line, industry growing at 15-20%, which is quite decent. So I think we should be able to outpace the industry again in this segment as well.
That's unfortunately all the time we have on this edition of KYC. From Puneet, myself, everyone who puts this show together, thanks so much for watching. Hope this was productive. And stay tuned to NDTV Profit. More action on the other side.
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहे, देखो तो सही. I compare an actor's career like the stock market. Sometimes your stocks are low, right? And when your stocks are low, no one's buying. Sometimes your movies do well and your stocks are on the rise, and everyone's suddenly buying that stock.
What point do you think that the film career perhaps is not going the way that you thought?
Itch of wanting to be an entrepreneur started itching a little more, and I wanted to scratch it.
One of the most important lessons is to know when to pivot.
The burn was far more than the earn. We were burning and I was watching my money just go out and like, oh my God, what's going on here?
Regime that has kicked in this month means that all of us are going to be paying less tax. But you know what they say, ye dil mange more. Can you potentially save even more? I was talking to someone recently and he said that he'd decided to register his HUF or Hindu Undivided Family for tax purposes. And my first reaction was, why? What advantage does that give you? I started asking around and found that a lot of people are considering this or have toyed with the idea. If you're one of them, or if you don't know what I'm talking about, this episode of Money Wise is for you. Join me today is Bijal Ajinkya, partner at Khaitan and Company, and CA Nitesh Buddhadev. Thank you so much to the both of you for taking the time. Let me start with trying to understand where this concept emerges from, and obviously the best person in this room to answer is the lawyer. So tell me, where did this HUF concept start?
Okay.
Thank you, Alex. So what is very interesting is that the concept of joint Hindu family, firstly, under law, there is no concept of a Hindu undivided family. That's a concept and a construct which is developed under the Indian tax law, which he will surely talk about. And under the Hindu customary law, given the fact that you always had situations where families actually lived jointly and together under one roof, they conducted business together, either by way of energy, by way of capital, etc. To that extent, you had a concept of joint Hindu family property. And it is from there wherein by custom, families worked together to really build in the common hodgepodge. They were taken care of by together, as maintenance, lifestyle, etc. But of course, the question which really arises that is this concept of a joint Hindu family property something which is interesting, important, or beneficial today, or it's really a relic of the past?
And you mentioned that HUF is not something that finds itself in that law. It's not mentioned.
In the Hindu Succession Act of 1956, there's absolutely no mention. What we really refer to as joint Hindu family is really considered as co-partnery property.
Okay.
And what you will recall that in the year 2005, when there was an amendment to the Hindu law, females, which is daughters, were essentially considered as equal to their brothers, which is their, which is the sons of the, the karta or the main person who created that co-partnery. So to that extent, the co-partnery properties ever since 1956, when we did have the Hindu Succession Act, when it was actually, brought about, from that time itself, mothers, daughters, wives, etc. were all considered as heirs. However, a daughter was not considered a co-partnery of a joint Hindu family property.
Interesting.
And that essentially has come in only in the year 2005.
Okay, so we'll talk about that in more detail and also other legal aspects. But then, where does this HUF concept come from? It's a tax concept, isn't it?
True. So Alex, like she rightly said, but now what income tax says? Income tax says that if HUF is there, that is recognized as a person.
As a separate
legal entity.
Okay.
And now all the Hindu, Buddha, Jain and Sikh, if they are married, they already have HUF.
Okay.
Yeah, that looks quite confusing. I'm saying that already have HUF because there cannot be a contract to create a HUF. By way of being in a family, there is a HUF. You just need to register that.
Okay.
So when somebody comes and tell me that Nitesh, I want to form an HUF, I said you already have an HUF. Of course, if you are Hindu, Buddha, Jain and Sikh, you just need to register that.
Okay.
So once you are registering, Alex, you get a separate legal title. Now, so for example, there is a Nitesh Buddhadev and Nitesh Buddhadev HUF. Now there will be a 2 PAN card and 2 separate assessee in the eyes of a law.
Okay,
and of course, that HUF consists of my family.
Okay. Legally, the formation of an HUF, does it require a certain number of members, or can you form an HUF just between a husband and a wife?
Okay, so I'm going to consider your question to more talk about a joint Hindu family property.
Okay.
Right? And to that extent, today, if at all you have a husband, a wife, and let's assume the husband's brother also, right? So you have 2 brothers, their respective wives, they may or may not have children. If they themselves have created property by their joint efforts, their joint capital, hard work, etc., they can themselves call it a joint Hindu family property.
Okay.
I don't need to register it as such.
Right.
So even if I am just 2 brothers itself, they can be considered as a part of a joint Hindu family property in itself. And then of course, the wives, the children who are really born, and what is important to note, that a wife in an HUF, or rather in a joint Hindu family, which you may register under tax as an HUF, but you may not register it. But that does not take away the fact that I do have a joint Hindu family property. Now, when I do have a joint Hindu family property, so far as you have, it used to be only the male lineage. Only in the year 2005, the daughters of the male lineage were actually considered co-partners.
Right.
So the person who really creates that particular, pool of joint Hindu family property is called the Karta, and the members who fall below it, which is essentially 3 lineages below it, are considered as co-partners.
Okay.
Once I have property in a co-partnery interest, all of them equally take till the time I actually have a formal partition.
Okay.
To that extent, the mother, or rather the wife of the Karta, is not considered a co-partner. She is only considered a member.
Okay.
So a co-partner takes legal interest, while a member essentially gets maintenance when her husband actually passes away.
Okay, so explain that concept to me, right? Because these are all things that flow into the HUF as well, I'm assuming. So let's address some of the legal aspects first. I was reading very briefly online, and the criticism of the HUF structure, and we'll get to the advantages as well, but the criticism of the HUF structure, perhaps not informed, and so I'm hoping that you will clarify, is that women do not get an equal say, and you're already saying that they're treated equally under law. Can a woman be a Karta?
A woman can be a Karta, and there has been a judgment of the Supreme Court in the year 2020 to essentially say that if the oldest co-partner who is living is not a male and is a female, then to that extent, that female, who could be a daughter, can actually be considered as a Karta. So let us look at a classic structure. You could have a father who has created an HUF. The father has his wife living. Wife is considered a member, and let us assume they have 2 children, both of whom are daughters. Now, when the father passes away, the widow does not become a co-partner, and she cannot become hence a Karta because she is yet a member.
Yeah.
So therefore, whoever is the older of the daughters between the 2 of them can essentially step in to the position of a Karta, and that has been clarified in the judgment of the Supreme Court in the year 2020.
Okay, so
just to add that, so it's quite simple, like she's saying, if I'm born, anybody is born in the family, can be a co-partner. It can be a male or a female.
Yes.
But somebody is coming in a family as part of a marriage.
Right.
So that woman member will be called a member and not a co-partner. So she can't have a partition in the HUF. That's one of the limitations you are talking about, right? Rest all other rights are there. I think the only thing is that they can't ask for a partition.
Sure.
So that's the only limitation I think they have.
Okay.
Right?
Hypothetical scenario, in this situation, you talked about both the children being daughters. But in the event that there are 2 children, one is a daughter and one is a son, the son is younger, can the older sibling be Karta?
Okay, so by customary Hindu law, it essentially goes by the male lineage.
Right.
So if you have a male as a co-partner, it is the male who actually will become the Karta and not the female.
Okay.
So it's only in situations where, for whatever reason, the male is incapable of acting, is incapacitated, etc., then of course the female daughter can actually step in.
Okay, so we've already had a fascinating conversation about the origins of this structure, but let's get into the aspect of why this is something that so many people are drawn to. What are the advantages from the perspective of tax?
I agree, Alex. The why should be very much clear because what happens? People just create HUF without knowing the nuances of that, and there it lags and they fall into all the type of tax scrutiny and all that thing. Now, why we should have, or one should have HUF, right? So for example, if I have my HUF, okay, let's say there is some ancestral property which is I'm going to inherit, okay, that might come into my individual share, okay.
Sure.
Instead of doing that, why? Because I am into 30% tax bracket, my wife is also in 30% tax bracket, right? Now if I get that property in my name, and let's say if I'm drawing some rent out of that, okay, that is on a rent. Now whatever rent I'm earning, I need to pay 30% tax on that.
Yes.
So why not to have a separate person, and I can transfer that property into that, and that's the Nitesh Buddhav HUF.
Okay.
If that property goes into the Nitesh Buddhav HUF, now whatever rental income property receives would be taxed separately under the HUF.
Okay.
Because it is an ancestral property. Okay, and that is by will, it's going into the HUF. So that's the biggest advantage. And what is the biggest advantage? Now, because this being a separate legal person under income tax, I get a 4 lakh rupees in the new regime, the tax benefit, that's the slab rate. Now, let's say when I want to sell that
Isn't
property.
it 12? So don't you get the redemption? Not redemption. Sorry, I'm talking about the rebate. The rebate, yeah. Don't you
That's
get the
quite
rebate?
interesting, and that's why I mentioned it's only 4 lakh. Most of the tax laws for HUF is like an individual, right? But your HUF does not get the benefit of rebate.
Interesting.
Yeah.
So it's not 12 lakhs.
No, it's not 12
Okay.
lakh. So if it's under the HUF, it's only 4 lakh rupees under the new regime. In the old, it's same 2.5. Now, but still, Alex, with that 4 lakh, 0 to 4, 4 to 8, 8 to 12, the whole tax slab benefit that HUF property will take benefit of, and because of that there would be a significant reduction in the tax liability.
It's not 30%, it's effectively going to be about 60,000 for a 12 lakh income, right?
Right.
Approximately.
Yeah, approximately that much, right? Yeah. So that's the first benefit. The second thing, now whatever asset I create out of that rental income, I might invest that money into shares, mutual fund, or maybe a FD. Those all income will also be considered as HUF's income. That's the second level of income. Now the third benefit, whenever I'm selling out of any of these assets, the capital gain also taxed in the HUF's name. So for example, let's say if I'm booking my capital gain 1,25,000 every year, that's for Nitesh Buddhadev, I can do the same thing for my HUF also. So all level, you can have as simple as that, a separate legal person. So that's, I would say, a main benefit of an HUF. Of course, it's recommended if it's a nuclear family. And she can talk more on that. What
I do want to ask that, because some of the aspects, of course, and I completely understand if you find that some of the legal aspects of the formation of this HUF, or I should say co-passionary property, as you very clearly mentioned, are a little complicated. So let's talk about some of these aspects, right? Because the two terms that stick out, Bijal, are co-passioner, karta, co-passioner, and member. How do you distinguish between these three?
Okay, so if you look at a situation where you have a man who creates an HUF, he basically wants to declare that this property which I am actually throwing into the common hodgepodge is not only mine, it is supposed to belong to the family as a whole.
Okay, so split ownership of
You're
that asset.
splitting it, right? So to that extent, the man who creates the HUF, he would be called the karta, who's like a manager to an HUF.
Okay.
So he will take the decisions on the HUF. You know, if there's voting on shares to be done of which are held by the HUF, he will be the one who will actually undertake that.
But he doesn't get a higher share.
He does not get a higher share because he has now thrown it into the common hodgepodge.
Okay.
All the co-partners have an equal share.
Okay.
Now let us look at who are the co-partners. So let us look at a situation where it is the man, he has his wife, let's assume he also has a mother and a sister, and he has 2 children. In a situation of an HUF, it would be the wife who would be considered a member. The children, both son and daughter, assuming the HUF is in existence post 2005, which is where you had a change to the Hindu law bringing daughters equivalent to the son.
Right.
Both the son and the daughter would essentially be considered as co-partners.
Okay.
The mother and sister are not a part of this particular HUF at all.
They would have. So the sister would have been part of
She
their
may be a part
father's
of
HUF.
She may be a part of her father's, and she also may be a member to her husband's HUF.
Got it. Okay.
Right? So now you have a situation, you have father, 2 children,
Yeah.
all 3 being co-partners. Assume the son is married, his wife as well as the karta's wife are both members. What are the rights of a member?
Yes.
A member cannot demand partition. However, if the person she is married to, who is a co-partner, he passes away, then in that situation, she does get a right in the HUF, which is equivalent to the share of her son.
Okay. So in this case, okay, so let's simplify this with an example, right? So you're talking about an HUF structure where there is one property and there are 3 co-partners and 1 member. Okay, I hope I've got this right. Okay, husband, wife, 2 children. So therefore, husband is the karta, 2 children are the co-partners, the wife is the member.
That's correct.
In the event of the husband's demise, and here you're talking about a 1/3 ownership of this property between the father and the 2 children. In the event of the father's demise, the wife would get 1/3 and the 2 remaining children would get 1/3 and 1/3 each?
Okay, so because of birth itself, the 2 children have already by birth in itself got a 1/3 in the
Yes,
property.
they already had that.
Right? So you have 1/3, 1/3, 1/3. Now the husband passes away. His share, which is the 1/3, gets divided again between the 2 children and his widow.
Okay, so therefore that is divided 1/3, 1/3.
That's correct. So it's a 1/9 which the widow is getting.
Right.
And now the children have one which they have inherited from father,
Yes.
which is a 1/9, plus their own which they have got on birth, which is another 1/3.
Well,
that's the way it works.
There's a lot of fractions involved in this latest example that we had, a hypothetical conversation, but hopefully you have understood it as I have understood it. The fact is that it is a little complicated, right? And I would think that people would hesitate to have this kind of a complication. I know that you've spoken about the tax advantages, Nitesh, and we'll speak about some more aspects there. But simply for the purposes of a tax advantage, if you're splitting your asset, whether it's property or whether it's a mutual fund or whether it's anything else, you're making things more complicated, aren't you?
Absolutely. You're making things very complicated because this is becoming fragmented ownership in a way, right? And to that extent, if at all the succession plan of the family is not really to have it owned equally, in a way it is considered as equal ownership. Now with the growth of nuclear families in India, gone are the days you had like the entire joint Hindu family living together into, one old ancestral house. You do have now nuclear families where the meeting of minds may not be as it used to be in, in prior years, which